Hi everyone, my name is Vendik and you're welcome to the channel. Today we are going to talk about a candle range theorem. It's a very nice concept that is in agreement with price action. Okay, so that's why I say I should introduce it to you. You can modify it and make it a trading strategy. It's a very good one. Okay, so before we get into it, don't forget to do the YouTube business. Okay, if you're new to the channel, YouTube business is for you to like and share. And then if you find any value in this content, please do consider to subscribe. Okay, and we will keep you updated. Right, so if you want it to bring more result for you, you really need to look at it from a higher perspective, like a higher time frame. So this candle range theorem is kind of a concept often discussed by mostly price action traders. Okay, and some of them discuss this thing without actually knowing, okay, it actually exact same price action. People try to bring up a concept and give it a name. All right, then if you don't understand it very well, you tend to actually compare it with the exact thing you have been doing. Okay, but if you can fall back to the basics of trading, right, you get to understand that this thing itself, it's still the basic. All right, they just give it a name, maybe modify one or two things. Okay, so modification in trading, okay, it's something that's supposed to be happening every day. Okay, because market conditions changes. Okay, the economy changes, so modification is actually needed every day. Okay, because at some point the price action that you were trading as of 2 years ago might not be effective again, okay, this year. It all depends on the economy and the stability of the markets. All right, so modification is something that you really need to pay attention to. So modifying it and then give it a new name kind of complicated. All right, so we really need to take note of that. So when we say a candle range theorem, it's still a normal being able to understand how candle is formed. The important thing you need to know about this particular topic we want to discuss, it is the range. Right, it is the range, nothing else. Right, it is the range, just the range. Let's take this candle as the high of the day and then this one as the low of the day. Okay, so if you got a candle close like this, all right, if you are if you are if you are good with the channel, you will understand these things. All right, that if you eventually have a candle that closes bullish like this, right, that you anticipate the next candle to still close bullish. You anticipate the next candle to still close bullish. Okay, with provided is in line with the LTA that you have, the previous LTA. All right, so let's see how far we can go with this. So if you have a regular candle, something like this, a bullish candle like this, okay, printed, okay, then the next candle, all right, did not close above the previous candle. All right, this is an opportunity for you to know that, okay, you have the rest of this range to fill up. Okay, this is where you close, you have the rest of this range to fill up. Because one thing you really need to know is that market move from one liquidity to another liquidity. All right, so what does this mean? This means that this particular candle has taken this particular liquidity here, this candle has taken it off. Okay, so for the fact that we failed to close above it, it simply means we are rejecting off of this liquidity. Okay, so what's our, and we are anticipating that the next candle will actually need to fill up this liquidity here. All right, so in this concept, what you really need to know, immediately you have a candle like this, okay, you need to mark up your swing high and your swing low. All right, you need to mark up your swing high and your swing low. All right, because, and then the second candle that closes, all right, you mark your swing low on that too. You mark your swing low on this too. All right, these are the things that confirm it. So with that, you can actually be looking at setup one on a lower time frame within this zone. Okay, because before this candle got broke out, so definitely you have a setup one around here on a lower time frame. If you're actually very good with the channel, okay, you will know what is setup one. It's not actually a new concept, it's what we've been trading. Okay, so you definitely get a setup one around this place, then you will sell. Your target won't be anything down, you just target the next swing low, all right, of the candle that creates this concept for you. Okay, so it's as actually simple as that. Okay, I don't actually want to waste more time on this. I let me recap this. Okay, if you have a candle like this, and mind you, this will always happen when you have if you have a support, you have a support coming from the previous market structure to this point. Okay, so when you have a support like this, and then you start having candles like this, let me check this. Let's say there was a candle before this one. Okay, there was definitely a candle before this one, and this, suppose this will be a bullish candle. Okay, there will be a candle before this one. Go say, so you are driving towards a support level, and then the candle closes like this. All right, you wait, and then the next one closes something like this. Okay, so this gives you opportunity to trade from this swing low, all right, to the next, to the previous swing low. All right, so this becomes your trading range. Okay, this particular range becomes your trading range. Okay, so that's actually what you should be looking at. Okay, so it's as simple as that. So if you know what is setup one, if you don't know what is setup one, you go and watch setup one video, so you know how to step down to a lower time frame, and then you get the setup done. Okay, you get your entry and then you push it down. It's actually a concept you can use to confirm your price action entry. All right, so it doesn't mean you should change what you are trading. It simply means you can add it up. Okay, if you see a setup like this, it simply means it's actually in agreement with what you are looking at. Okay, so because at some point we don't know if a support level is going to break out or it's going to respect it. So that's another thing. So if you get a setup like this towards a support level, all right, it simply means it's going to respect that support level. Even if it doesn't respect, this particular liquidity needs will actually be filled up. So you should be looking at something like that. All right, if you find this video useful, don't forget to do the YouTube business, and we will see you in the next episode.